Hey guys, good morning everyone, good evening, wherever place you are. My name is Dennis Mwenga Mwendoa, Global Market Analyst here at Valetax. Guys, welcome to our podcast. This is, I think, our fourth or third episode. I'm not really sure, I can't keep up. And guys, today we are going to talk about a very, very interesting subject. We are going to talk about mechanical trading systems, or what I usually like calling rule-based trading systems. And look, guys, when it comes to your trading journey, first of all, you're usually trying to trade arbitrarily. You are throwing everything on the wall, hoping to see what sticks. But with time, you have to cultivate discipline, you have to cultivate patience, you have to cultivate expertise. In other words, you have to approach the markets like a professional, and professionals are very rule-based. And with us today, we have a professional in that field, Daktari. That is basically his name, his forex monkey. He has been in the trading industry for more than, I think, like 7 years right now, but he will clarify more on that. And Daktari, thank you very much for being here. I really wanted to talk to you about this subject. You have been on this case. You are always preaching about trading systems.
Yeah.
Always preaching about trading systems. So there must have been something that had pushed you to move towards this direction, because usually when we all start as discretionary traders.
Yeah, true.
But now you have moved away from that. So what was your trading journey like? How did you start? Where did you start? And what pushed you towards this direction, Daktari?
Yeah, thank you so much for this opportunity. My trading journey is a bit funny.
Okay.
Yeah, but this is my 6th year trading full time.
Yeah.
Yeah. Now, when I talk about a trading system, I want you to think about it this way. Trading is like a religion. Okay.
Interesting.
And when you talk about religion,
Yes.
we all have different beliefs.
I love that. Yes.
So if we have different beliefs, what works for you might not work for me.
Yes.
And vice versa, right?
Yes.
But since it works for you, it means you have to have a very strong belief on the same. Just the same as trading. Now that one is when it comes to strategies, okay? We have very many different strategies out there.
Yeah.
And each strategy could be working. Maybe statistically, we don't really know. But what works for me is my belief, right?
Yeah.
What I need to do is to build a set of rules around that belief.
Yes.
Every single religion has its own rules.
Yeah, its own rules, yes.
Or commandments, or whichever they call them, right?
Doctrines, commandments.
Yeah. The same thing with trading.
Yeah.
If you don't have the rules, then you're not really trading, right? So when you talk about a mechanical trading system, it's a trading system where it's a rule-based trading system, okay? So the first thing this system is going to do, it's going to dictate your trading strategy. That is number one. That is the core thing, of course. Everybody needs to know which strategy they are using. So when you're asked what are you trading, you should be able to explain in less than even 10 minutes, okay? That is number one. Number two is now when you're trading, what are you trading? You know, the market is very wide, right?
Yes.
I'm a forex trader and I trade GBP USD only.
Yeah.
So that is my instrument. When I get onto the charts, I look at GBP USD. This is my watch list. So your trading system has dictated your strategy and your watch list. That is number two. Number three is what you look for when you get into the market, right? So some people will do top-down analysis. Some people will use indicators and stuff. So what do you look for in the market? What time do you trade? Now, this one is going to dictate the type of trader you are. So if you are a swing trader, of course, what time do you look for trades? Do you hold trades through fundamentals and stuff? If you're an intraday trader, which session are you trading? Of course, it has to fit your region. You see, if you're in your country, you can trade London and New York, Asia. What time are you trading? And now also you need to understand, trading is a game of probability, right? When you're trading and you make money, it does not mean you are right. Just that the odds were in your favor. In a game of probability, there is no being right or wrong. It's either the odds are in your favor or not.
Yeah.
Because when you have a trading strategy, you can even take your A+ setup and still hit a sell. true.
Yeah, true.
Yeah, true or true.
True, true. So now, you basically stopped being a discretionary trader. You started out as a discretionary trader?
Yeah, of course, initially when I started trading, there was no a lot of information on the media. Like currently, there are a lot of free classes.
Yeah.
There's a lot of content on YouTube.
Yes.
Back in the days,
Yes.
maybe you are in some Telegram channel, somebody sending signals.
Okay.
Yeah, or you just watch some.
You're busy there, you're waiting for the signal to come in. Buy now, buy.
It's slow, you get the signal 10 minutes later, you hit it, you lose money.
Yes.
Yeah, so that was the journey. Or maybe using indicators. There are very many videos on using indicators, moving averages and stuff.
Yes.
There was nothing rule-based on that.
Yeah.
But over time, I really wanted to understand this thing. And I said I need to have an approach to the same, right? Maybe the time I get into it, because back in the day, you could be even trading midnight. You find yourself looking for entries during midnight, right? You're trying to scalp, the market closes, it opens with a gap, it messes your account.
The spread is crazy high.
Crazy. You're not yet getting into profits.
Yes.
Execute, you are in loss.
You are in loss already.
So I had to find a way that I can have something that is structured.
Structure.
But you can have structure without without a trading strategy. So you're still messed up. So the first thing, just like I mentioned, is the strategy, the learning part. So you need to have a strategy. You learn a strategy. You collect data on the same. You need to be sure at least it works. And then you learn, you back test, you forward test this strategy on a demo account. And then you need to test this strategy with a live account. Not a very big live account.
And before you continue, what is the meaning of when you talk about testing? So first of all, you build the system.
You learn
a strategy. First of all, you learn a strategy. Then after you learn a strategy, you start building now.
You want to build a system around
you want to build a system around. So you collect data first. So data collection first.
This data collection
is
now for you to have proof that whatever you learned is working.
So what type of data are you collecting?
So the first one, we've said backtesting. Backtesting is you going back and replaying dead markets. So you can go and check 2020 market, 2019. There are many backtesting softwares.
Yes.
Very debt free.
Yes.
You backtest first.
Yeah.
When you backtest, you need to follow a certain criteria so that you don't have the wrong data. Because when you're backtesting, the market is dead. You can find you can backtest 1 week data in 3 hours. You've not learned patience there.
Yeah.
And you could be backtesting during even the wrong sessions. You're backtesting Asia, but in your time zone, you cannot make it to the market during the Asian session.
Yeah.
So the first thing is you need to backtest the sessions that you are going to be trading live. That is number one.
Yes.
And number two, look at the win rate and look at the targets. Stop over targeting because it's a dead market. So you backtest first. Once you have proof that it was working on a dead market, now you can look at the live markets, but you use virtual money. That's why broker accounts have demo accounts.
Yes.
Okay? When you're using a demo account, try to use an account size equal to what you'll be depositing live. If you want to be trading $1,000 account, make sure your demo is $1,000. So that you don't backtest on a $200,000 account and then you trade a $20 account, then you start complaining.
Yes.
Forward test. So forward testing is trading the live market with virtual money. Then live testing. Live testing, now you use a real account.
Okay.
But this real account is not for you to make money.
Okay.
It's for you to learn your emotions. Now we are live testing.
It's a process.
Yes. So the reason why traders find themselves in an endless loop is because they've skipped these steps. So when you're live testing, so maybe when you are learning, you've learned for 8 months.
Yes.
You've saved up maybe $2,000.
Yes.
Then take 10% of that for live testing. So live testing is going to teach you who you are when your money is on the table and the markets are raking you up. Number one, for example, you get, maybe you've made money and then you're like, this thing is so simple. Now you want again to trade, okay?
Yeah.
You're greedy.
Yes.
So when you journal that down, you say, I was greedy.
Yes.
When I see money has been made, I want to make more because it seemed so simple.
Yeah.
when you lose money, you want to get into another trade with a big lot size to recover that money.
Yeah.
You are revenge trading.
Mm-hmm.
So this is what the life testing phase is about.
Mm-hmm.
You learn about your emotions because all these things, the emotion stuff, you'll never learn about it on demo.
Yeah.
That's why you'll find somebody holding a trade on demo for a very long time, but in a live market, once they see just some few profits, they've closed the trade.
They've closed the trade.
So learning, back testing, forward testing, live testing. That is now the data collection part.
That's just data collection.
Yeah. You are in the step of building your mechanical trading system. Because when you've known your emotions,
yes,
now you'll be journaling them over time.
Yeah.
And then, of course, the journal is set to be reviewed.
Mm-hmm.
When you review your journal, you're like, by the any time I made a lot of money, I ended up losing it into the market. Mm-hmm. Why? Mm-hmm. I was greedy. Mm-hmm. What should I do to avoid this next time? Mm-hmm. So you use those patterns to become a better trader.
You're getting feedback.
You're getting feedback from yourself. You're teaching yourself.
Yes.
So you're becoming the better version of yourself. That is trading. That is what trading is about. But the world of trading on social media is the opposite.
Yeah.
You're trying to compare yourself to somebody else. You're like, I made $20. This guy made $1,000. I want to be like him. But you're not focusing on what is making you to be stagnant on the $20.
And comparison is a thief of joy. And that's the thing. It's like we always want to be like so and so. Yeah.
True.
But using this approach that you're talking about, you don't care about being like so and so.
No.
You want to be you.
You want to be better than yesterday.
So yes, that's a very nice
person in the mirror.
Yes. I like that. I
your
like
mechanical
that.
trading system. It has had the strategy part because you've had the data now, right? Mm-hmm. The next thing you're going to do is come up with a risk management plan.
Okay. And before we move on to the risk management plan, like for the sake of our viewers, can you give an example of a strategy that someone can say, okay, let me build something around this strategy, trend following strategy, consolidation strategy, I'm just throwing in what an example.
A strategy is just what guides you to do an analysis in the market and come up with a bias. What I can just say is when you're learning a strategy, make sure it's showing you two things. Candlesticks tell stories. Okay? You need to sit down and with your strategy, you learn a story is a narrative. Your strategy should be able to show you the narrative. Are we bullish long term? Are we bearish? Are we trading the swing trend? Are we trading a pullback? Learn the narrative. And your strategy should be able that once you've learned the narrative, based on 1, 2, 3, 4 things, you come up with an objective. Okay? So for example, I've known gold is bullish. Now my objective is to buy. So your strategy should be able to show you the narrative in the market, and it should be able to help you as a trader to come up with an objective, and it should leave room for flexibility. The market will not just buy forever, okay?
Of course.
Sell forever. After an objective, you leave some room for flexibility. If these conditions for buys are not met and it goes to a certain point, then I'll just sell. It's as simple as that.
Okay. Interesting.
So the plan is for you to know your strategy and build something around it. So the mechanical trading system number 2 should have a risk management plan.
Now the risk management bit,
which is very important. Most people, they overlook this part because when you get to Instagram, there are very many accounts that have been flipped $20 to $30,000 and stuff.
20 to 30K.
They are there. I've never seen them. They're there. Somebody has flipped $1,000 to $50K. So the moment that has hit your subconscious mind, and the risk management has walked away.
You want to flip.
Yes, you can flip an account. It's doable. But can you do it consistently? It's going to be hard.
So it's like...
it's not about doing something.
It's like you flipping it. Are you saying it's like you can get... It's like you're gambling now. You can get lucky. But will you consistently get lucky?
There's luck in trading.
So
the importance of a mechanical trading system is not to just do things randomly.
Yes.
Do things consistently, something you can repeat for a long period of time.
Yeah, that
What
makes
you
sense.
should be aiming as a trader is not quick profits. It's longevity. The more you stay in the game, the more you can scale up slowly and you try to be better.
Yes.
So for longevity, we must look, instead of focusing on the upside, look at the downside. That's where the risk management plan comes in.
Okay.
So the risk management plan,
yes,
it should dictate the amount of money you risk. For example, when you see the prop firms, how they operate, they have the maximum daily drawdown. So you personally should have one for your account. Like in a day, you should not lose more than a certain percentage or on a given position. So for example, for me, I risk 2% per trade.
Okay.
I trade a fixed 7 risk to reward ratio. So I'll have 2 positions.
Yes.
One position targeting 3R and another one targeting 7R. So if I hit a sell, I'm down 2%. But if I hit TP, I'm up 10%. On one trade. Even if I hit TP1 and I'm out B, I'm still up 3% on one position.
Yes.
So I'm supposed to risk 2% per setup, and I'm supposed to have a maximum risk of 4% in a day. So I'm allowed to lose only 2 trades in a row in a given day.
Only 2 trades in a row in a given day.
But in my risk management plan,
yes,
I have something that is called the soft stop and the hard stop.
Soft stop and hard stop. Yes.
So the soft stop, if I hit 2%, the first loss, I'm down. So if I hit the first loss, I'm down 2%. That's my soft stop.
Yes.
At this point,
yes,
I need to sit down and ask myself, am I comfortable trading again? Or should I just leave that? Should I call it a day? If I'm comfortable, am I comfortable losing another 2%? Or should I reduce my risk? So you see, if I reduce my risk to 1% in the next trade and I lose it, I still have 1 trade to go. Because I'm risking 4% in a day.
Okay.
So my hard stop is 4%.
4%.
Once I hit 4%, then I'll just show up the next day.
Wow.
So I don't really look at the targets. I really focus on protecting my capital first.
Protection.
Yeah. Look at the downside before you look at the upside.
Okay. And will you say when you are testing a strategy, sometimes can someone be biased in the sense that you fit the data to suit the outcome that you want?
Yeah. So when you are testing, you see when you're testing, for example, you're back testing.
Yeah.
Back testing is very funny.
Yes.
You can play price action so fast that you did see a setup, then you spot it after you've played that price action. So you cut it again and look at that setup and it becomes a winner. So the best thing, just collect that data. But the live test will tell you everything. Most people lose it there. You find somebody has the data, they tell you, but they have a very working strategy. But when I fund my account, I go blank.
Totally blank.
Because they skip the live testing phase. Yeah.
Wow. I from this conversation, I'm gathering like there is so much more.
Yeah.
We can talk, we can go deeper in details. And the funny thing is, even institutions, hedge funds which hold and manage billions of dollars, I have noticed for some of them, they use algorithms. And this algorithm is part of systematic trading to manage funds and a lot of money.
Yeah, true.
And so you find there are 2 types. You can do this manually, and you can also automate. Right? You can also automate as well. And I'll say this is really the professional approach, because at the end of the day, you get to collect data.
Yeah.
And then you're working with feedback, just as you had said. You're working with feedback. You're trying to see where you can tinker.
Yeah.
Where you can just leave the system to run as it is.
It's like when you say working with feedback, remember we talked about an emotional journal.
Yeah.
Now leave that aside. There's your trading journal.
Journal, yeah.
You journal your entry points, where you took the risk, and maybe the targets.
Yes.
You can find that you are having some very huge targets, and most of the time price goes in your favor, and then it takes you out break even.
Yes.
It's giving you feedback. You need to decrease your targets.
Yeah.
So that's why you find that the smaller the risk to reward ratio, the bigger the win rate. Somebody with a 1:3 RR their win rate could be bigger compared to somebody with 1:50 risk to reward ratio. So the feedback review of this journal should be done regularly so that you look at what is the market trying to tell me.
Yes.
Yeah. So maybe it's your sell placement. You look at your losses, you're just tweaked out, it moves in your favor.
Yes.
You get the feedback. I should work on my stop loss placement.
Stop loss placement.
So in this mechanical trading system, you work with feedback from your own work.
Yes.
You're not relying on somebody else out there. This guy does this. No. I usually do this. Now I should do this.
Yes.
Emotionally, I'm like this. I should adjust to be like this.
Yeah. So, Daktari, I love the way we have discussed about trading systems, mechanical trading. I feel if I'm someone who is starting out, this is definitely an approach that I would really want to take. And not only even starting out, after you've been in the market and after you've blown multiple accounts, your emotions are all over the place, you cannot manage them. And we are all humans. Some of us are very good at managing our emotions. Some of us are just terrible. So, on that note, how can people reach out to you for assistance or for help in this subject?
So for me, you can maybe follow me on X, that's at Daktari3, or maybe TikTok and Instagram, that is Daktari7. You see, there's something I mentioned previously.
Yes.
I trade at fixed 3 and 7R. I'm pretty sure you've also seen it on my name.
Yeah. So yes, by the way. Yeah, you are what you do. Yeah, definitely.
So for the trading system we've talked about, it's good people embrace the same. And you still need discipline to follow your own rules. You see, in the outside world, if you don't do something, there's somebody who's coming for you. Could be the feds, even in school. Your deputy and stuff, somebody is going to punish you. But in the markets, nobody is going to punish you. Okay? So you step into radical accountability. Every weakness that you have, it's punished. And it's punished by you losing money. Every strength that you think you have is tested until it's sharpened. Yeah,
I like the way you're putting it. So you have been using Valetax, of course, when it comes to, trading this system, this mechanical system. How has that been going, and how can guys really get help as well from the broker perspective?
I've been using Valetax for a while. It's smooth. I've not had any issues. Because personally, I only trade one pair.
Yes.
And for my pair, there's nothing much like spreads and stuff. So I think people can get to learn. For example, they should appreciate such a platform. Okay?
Yes.
Where we can just come and talk about things like this.
Yes.
Very few people will talk about a mechanical trading system. People will just tell you, fund your account, I'll show you how to flip and stuff, account management. And also you guys offer free classes, right?
Yes.
Yeah, maybe once in a while, talk about these things in the free classes. Though, I think when somebody comes for free classes, they just expect to be taught how to make money, right?
Yeah, that's the thing,
So when you have these free classes and you talk about such things, it's going to change the way people view trading.
Definitely.
And also, I will encourage people to push such. Maybe this YouTube channel, you share it to another trader. Because most YouTube channels, they just show you strategies and fancy lifestyles. So I appreciate you guys for having such a platform.
And we really appreciate you so much. And thank you very much for supporting the community, supporting the Valetax community as well. And guys, as you have heard, we offer free classes. And in these free classes, of course, some of the webinars we do, some of the sessions we do, we're going to be having Daktari himself there breaking down mechanical trading systems, systematic trading approaches, and all that, and how to use our platform to take advantage of mechanical trading systems, to leverage on it, so that you can be successful in your own trading, so that you can eliminate the emotional baggage that comes with trading, and also trading can be easier for you. You can automate your mechanical system, you can do it manually. At the end of the day, the goal will be to keep it as simple as you can. So thank you very much, guys, and till the next episode with Daktari, of course. We're looking forward that class. Guys, watch out for that class, yeah?
We can have more episodes.
Yeah, and more episodes, yeah.
It's an honor.
Yeah.
So maybe one thing to the viewers
Yes.
is that once we've learned about a mechanical trading system,
Yeah.
in conclusion, we can only say that you don't rise to your level of imaginations. You fall to the level of your systems. So build solid systems.
Build solid systems.
Yeah, thank you so much.
For longevity. Thank you so much, guys. Until next time, cheers and happy pips to all of you.